Assalamualaikum warahmatullahi wabarakatuh. Good morning and good evening to the surfawas. So we are group from the investment analysis from section 1 going to present about the 5 different industry company. So my name is Muhammad Danial and my friends also are Adha, Yusry, Hafify and Adib Kulaimi. So the first company is the Orange SA, which is under technology industry. The market cap is 46.174 billion. And the nearest competitor for the company is the AT&T Incorporation. So for the second company that we take is the Laboratory Corporation of America Holdings. It is under healthcare industry. So for the market cap for the company is 70.987 billion. So we take the United Health Corporation as the competitor for the company. For the second company is the Coca-Cola company. So the Coca-Cola company, as we all know that the Coca-Cola company is a soft drink. So it is under beverage industry. The market cap is 177.529 billion. The nearest company we all know is a Pepsi Coca-Cola. So for the move to the next company is a Nike. So the Nike is under consumer good industry. The market cap is 112.017 billion, and we took the British American Tobacco as a competitor for the company. And the next is HSBC. So we know that HSBC is a bank, so automatically it's under financial industry. So the market cap is 200.009 billion, and the Mastercard Incorporated is the nearest competitor for the HSBC. So we move to the next slide. The next slide is show the two first company that we took is the HSBC and Mastercard. So from the slide we can see a big difference between HSBC and Mastercard in experience years. So we can see that HSBC took a bit longer experience compared to Mastercard, where the HSBC is 150 years and Mastercard is 39 years. The second is the EPS, earning per share. For the HSBC is 2.4. Is a bit lower compared to the Mastercard, where it's 3.65. So the third is the DPR. The DPR is dividend per ratio. So we can see that the Mastercard has a lower percentage compared to HSBC, where the Mastercard is 23.15% and HSBC is 106.25%. So we move to the analyst price. For analyst price, Mastercard has a higher price, where it's 204.64 USD compared to HSBC is 57 USD. So the market price for the Mastercard is 192.12 compared to the HSBC, which is have a lower price, which is 50.22 USD. So the next company is Orange SA, and its competitor is AT&T Incorporated. So for the X20 years, AT&T Incorporated took a bit longer than Orange, where the AT&T took 35 years compared to 28 years in Orange. So the EPS for the AT&T is a bit higher, where it's 4.76 compared to Orange, which is 0.76. So the DPR for the Orange is a bit compared to the AT&T, where the Orange is 106.70%, and AT&T take 41.39%. So the analyst price for the Orange is a bit lower compared to AT&T, where the AT&T is 37.83 USD and the Orange is 20.88 USD. For the last is the market price. For the market price for AT&T Incorporated is a bit higher compared to Orange, where the AT&T Incorporated is 31.93 and the orange is 17.22 USD. So we continue to the Hafify.
Okay, now I'll proceed with the ratio analysis for Knight Company and British American Tobacco. Both company is under consumer good industry. Okay, for Knight Company, it's already established about 54 years compared to British American Tobacco, which is already established around 116 years. Okay, for the EPS for Knight Company, it is about 25% compared to British American Tobacco, which is 2.31%. Okay, for dividend payout ratio for Knight Company, it is about 32% compared to British American Tobacco, which is 11.98%. Okay, for the analyst price target for Knight Company, it is about $71 compared to British American Tobacco, which is about $75. Okay, for the market price for Knight Company, it is about 69.50 dollar compared to the British American Tobacco, which is $51. Okay, next I will proceed with the Coca-Cola and Pepsi company. Okay, for Coca-Cola company, it is already established about 132 years compared to Pepsi company, which is about 119 years. Okay, for the EPS for the Coca-Cola company, it is about 0.29% compared to Pepsi company, which is 3.4%. Okay, for the dividend payout ratio for the Coca-Cola company, it is about 548% compared to Pepsi, which is 94%. Okay, for the analyst price target for Coca-Cola company, it is about $49 compared to the Pepsi company, which is about $118. Okay, for the market price for the Coca-Cola, it is about $42 compared to the Pepsi, which is $97. Okay, next I will proceed with the ratio analysis for LabCorp and United Health Corp. Okay, LabCorp already established about 47 years compared to United Health Corp, which is already established about 44 years. Okay, for the EPS for LabCorp, it is about 12.21% compared to United Health Corp, which is about 10.72%. For the dividend payout ratio for the LabCorp, it is 0% because LabCorp does not pay dividend for each shareholder. Okay, for the United Health Corp, it is about 26.82%. Okay, for the analyst price target for the LabCorp, it is about $195.87 compared to the United Health Corp, which is about $270. Okay, for the market price for the LabCorp, it is about $176 compared to United Health Corp, which is $241. That's all for me. Thank you.
So we will proceed to the strengths and opportunities of the companies. First, we have Knight Incorporated. The strength is their product is highly marketable in the market. So when we see that Knight have big cooperation in the sports, especially. They have sponsored many teams like football team, basketball team, and many more sports. And their opportunities, they should continue to focus on emerging markets. Next one is HSBC Bank. This company is in the financial industry that has well capitalized, and this strength they have to use to take the opportunity to maintain their strong capitalization position in the financial industry. This is really important. The third company we have is Coca-Cola. This beverages company have the good strength in robust distribution network, so they will have a good chances to take this opportunity to become a business which is more growth oriented. You can see that Coca-Cola has really good in their performance. When we can look at many products from their beverages that used by worldwide. The fourth company is the Orange SA. Orange SA is a company that from the technology industry that have huge customer base. They have a big customer in Europe, about 1.9 million fiber customers in France, Spain, Poland, and Slovakia. At the demand for internet service usage, fiber customers continue to escalate 40.3% year on year. This have to grabbed by Orange SA to take this opportunity to expand their market towards the Africa. So apart from the Europe, they will have their expansion towards Africa. The last corporation is Laboratory Corporation of America Holding, from the healthcare industry. Their strength is diagnostic and drug development technology. The company provides diagnostic and drug development and technology enabled solutions to for more than 11.5 million patient encounters per year. LabCorp typically processes tests on more than 2.5 million patient specimens per week and supports clinical trial activity in approximately 100 countries through its industry-leading central laboratory business, generating more safety and efficiency data to support drug approval than any other company. This is the strength of the LabCorp in the industry. The opportunity is that as more recently, LabCorp have played a key role in implementing companion diagnostic for immunotherapies involving the expression of PD-L1 with conveyance and central laboratory service. So this is their chance to lead in the industry as a pharmaceutical and biotechnology company.
So let's move to the technical analysis. For technical analysis, we use 20 days to identify trend direction and to know the potential of buy and sell signal for each company. So from the HSBC Holding PLC, the technical analysis, we see that there is a downward trend for the first period until July 2016. So when then the trend is move into upward trend. So when the price is upward trend, the moving average also will be upward trend. But in the trend, we see that HSBC Holding PLC, the price tend to move fluctuate. From here, when the stock price falls below the simple moving average, 20 days simple moving average, we will buy the stock when the stock is close above the simple moving average. So from the graph, we see that in July there is 3 times. 1, 2, 3 times. Yes, 3 times the stock price close above the simple moving average. So at this time, we will buy the stocks. So next, for the technical analysis company night, we see that there is a upward trend for the first period from January to December 2016. From here we see only two, the price is closed at above the simple moving average. So at this moment we will buy the stock. And the second period after the December 2016, there is a downward trend. When the price is close below the simple moving average, we will sell the stocks. So at this period, there are only 3 times the stock we will sell. See, the same thing goes to company Orange. We will buy when the stock, the price stock is above simple moving average, and we will sell when the price stock is below the simple moving average.
Now I will continue with the firm analysis of the among the 5 company. So for the return, the highest return is for Lapcorp, which is 0.26%, and the Standard Deviation, the lowest between the 5 company is 1.691%, which is Coca-Cola company. So for the CV covariance, the highest is Orange company, which is for 48.46%, 46. So the beta, the lowest is Lapcorp, which is 0.59. Now we continue with the portfolio analysis. For portfolio analysis, the covariance is to measure the directional relationship between the return onto risky stock. Positive covariance means that the stock return are moved together, while negative covariance show that the stock is moved inversely. So from the analysis, all of the company, their covariance are near to zero, which means all of the stock does not affect each other. Now we move to portfolio evaluation. So we use 3 types of portfolio evaluation. First is Shopee, second is Treno, and third is Tencent. For Shopee, since portfolio ratio is negative, shows that between the company portfolio and competitor portfolio is negative. It means that the return is lower than risk, which is not good. For Treno, both portfolio shows that negative. It means that it does not generate return on each market risk the portfolio has taken. And lastly, for the Jensen, both portfolio shows a negative. Since both portfolio show a negative ratio, this means they does not earning proper return for its level of risk, and both does not beat the market. So that's all from me. Thank you.
For the recommendation, as from the portfolio analysis, we can see both portfolio companies and competitor does not generate any return from the combination of return on investment, since their combination of risk is higher. This means that from the portfolio return, the value is lower than the portfolio risk. This does not give our profit in the portfolio, because we want to get the return that higher than the risk. Thus, we recommend to analyze back the company to include it in the portfolio in order to get the acceptable ratio for its covariance or correlation and coefficient, which is our friend Yusry said before about the covariance. The overall covariance is positive, which is that doesn't good for us. We want to find a covariance with an inverse relationship, because when inverse relationship is when there is negative value, it will give inverse relationship. When there is inverse relationship, it means the risk is lower. So what we want to do is we must ensure the covariance or correlation and coefficient for portfolio is negative. Just now I already said. The higher amount of covariance with negative value, it has the lower risk. This later will affect the Sharp, Jensen and Trainer measure to give a better ratio. So as a conclusion, when the covariance and correlation coefficient give us a negative relationship or inverse relationship, it will affect the 3 measures, Sharper, Jensen and Trainer, and give a better ratio. So that's all from us. Thank you.
Adib, dah habis.